How you doing, folks? Victor Cuevas, Victor for Advice. It's 2 days before Easter. Happy Easter. I hope it's a great one for you. Hey, my grandson was here at the house visiting with my wife and I and his mom. And I was working, but my wife went out to the local state park just a few miles from here, and they had a great time hiking, and they came back later on in the afternoon, and I was hanging out with them, and we have one of these Alexa devices, and it's pretty cool because you talk to it and you ask it questions, and it gives you answers and whatever you want to ask it. And my grandson loves this little Alexa machine. He's always at first try to carry a conversation with it, and he quickly learned you can't do that. But he loves to ask questions, and he asked the questions. I don't know where he came up with this particular question, but he asked a question that has to do with what I do for clients all over this nation. And he asked a question, and Alexa answered, and then he kind of like chuckled, and every time I say Alexa, the thing was waiting for me to ask something. But he asked a question, and I gave the answer. Then he kind of chuckled, and then went on to another question. And I said, and my wife and his mother were there. I said, time out, time out, time out. Did you guys hear the answer to the question? And they kind of looked at me like they didn't get it. They didn't get it. They didn't really. They just got, heard the answer, and they didn't think about it. And I said, John Brady, ask the question again. Now I'm going to ask the question that he asked. Then I want you to listen to the answer. And when you listen to the answer, think about it. Now stick with me, folks, because this is going to rock your world. Listen to the answer, think about it, and I'll give you my comments. I'll be done. Alexa, how much money is in the world?
Here's what I found on reference.com. As of 2013, there is approximately $5 trillion of physical money in the world. The total value of cash and checking accounts is estimated to be $25 trillion.
Did you hear the answer? I asked the computer how much money is in the world. And the answer was $5 trillion, physical money. Then the computer went on to say that in all the checking accounts in the world, there's about 25 trillion. Something does not compute. There's $5 trillion of physical money in the world, but there's 25 trillion in checking accounts, just in checking accounts. Well, Victor, how can that be possible? I mean, there's $25 trillion in checking accounts, but there's $25 trillion in checking accounts. There's only 5 trillion of real money. That's right. That's exactly right. And it's even worse than that, because that's just in checking accounts, not money market accounts, not brokerage accounts. You know what I mean? Not in individual stocks. Folks, you've got to grasp this, because I have been trying to get this message across to people here in the United States through my YouTube channel and through my website about sound money and about the infinite banking concept. It has to do with exactly what my grandson asked about, and I couldn't have asked for a better question for my grandson to ask. And when he asked it, it just clicked. Oh my goodness, I can't believe he just asked that question. And I was anticipating the answer. I knew it was going to be like that, but I had no clue. When you hear it, The numbers, it just blows you away. $5 trillion of real money, $25 trillion in checking accounts. In other words, folks, there's really, most of the money in the world, it's just money that's been made out of thin air. It doesn't exist. It exists in a ledger. But it really isn't there. In other words, well, let me put it in a different way. Take Bank of America. All right, Bank of America. Big bank. So if you had, let's say, I don't know, let's suppose they had 100,000, well, they probably have millions. Let's suppose they have 1 million people that have bank accounts, which I know it's more than that, but just say 1 million people. If all 1 million people went to the bank and said, give me my money, they wouldn't be able to do it. Let's take it down to your local regional bank. I have a bank here in town. I got about 6 branches. I've got my money in there. Now, they have an obligation that if I want to go there and take all my money, they got to give me all my money. I don't care if I have $300,000. They have to come up with $300,000 cash to give me. I don't know if they can do it on the spot. They might say come back in a week. I don't know. I've never tried it. But if everybody in this entire region that has a bank account in my bank went there on the same day and asked for the money, they wouldn't be able to produce it. It's not there. It's out and about making money. And here's why. We have the central bank of the United States. All major companies have central banks. I've been saying it in many videos. I believe the central banks are quasi-criminal organizations. It's a syndicate. It's a cabal of money guys. Getting fat, getting rich beyond your wildest imaginations, while the rest of us are hoping and praying that they're doing the right thing, which they're not. You can tell by the numbers from the computer. So they basically say if a bank has $1,000 on deposit, they can lend out $9,000. Well, if you go to the furniture store and they go, hey, here's $2,000 of furniture. How do you want to pay for it? Well, I want to borrow money. Okay, you fill out an application. They say you've been approved. Here's the furniture, and you walk out with $2,000 worth of furniture. Well, the $2,000 gets put into the bank account of the furniture company. Where did that money come from? You know, did $2,000, of physical money go into that bank account? No, it didn't. Where did it come from? Out of thin air, folks. Out of thin air. No physical money there. That's the way the world is. In 2008, when the economy went into the toilet, what happened? Well, all of a sudden, those loan proceeds weren't coming in. Banks went out of business. Why? They don't have the money to back up those loans. The whole banking system, folks, the whole monetary system in the world is based on you not needing all your money at the same time. The point I'm trying to get across to you folks is that we live every day minding our own business, going to work, buying food and clothes, keeping the roof over our heads, trusting and hoping everything is good. In reality, we live in extremely, extremely fragile financial environment. Now remember, there's $5 trillion in real money in the world. There's 25 trillion sitting in bank accounts, and the United States government owes $21 trillion. In other words, folks, just us, just our government owes $21 trillion in debt, yet there's only $5 trillion of money in the world. That's a scary thought. So all of you out there, and I'm going to get political here, all of you out there that love the Democrat principles, socialist liberal principles, where we've got to dole out money to everybody, like Barack Obama says, let's level the playing fields. We got to do what's fair. The money ain't there, folks. It's not there. And we keep playing this phony baloney game with digital money out of nowhere. And it could all come crashing down someday. I hope Jesus comes back before that happens. All right? This is what I want you people to get a hold of. Now, I'm not going to belabor that point anymore because I think you're starting to get the idea. You need to care about this. You need to care about this. So what can you do to protect yourself? First of all, folks, all of you listening to me, you need to get out of debt as soon as you can. You need to stop living beyond your means. Stop it. The government's already doing enough of that for us. And they're putting our country and our futures in jeopardy by doing it. If China said, okay, pay us everything you owe us on all the bonds that we purchased from you, we couldn't do it. They know that. They're happy for now to just collect the interest on it because that's all we can afford. Can't afford to pay it back. But yet we keep lending more. So you need to get out of debt. You need to do the right thing. Get out of debt. Stop loading up those credit cards. Get out of debt. Number one priority. Okay? Number two, you ought to think about divorcing yourself from the banking system. Well, how can I do that, Victor? I mean, I need to at least be able to write a check every once in a while. You know, when I get paid, the money's going to go into a bank someplace. That's fine. They can hold your money temporarily. And they can only hold a certain amount of your money. That's it. Not all of your money. Banks serve a purpose in that respect. And they do lend money, but let them lend to other people who don't know any better. Because you're going to learn better now. Okay? And mortgages is fine. But you can get to the point, folks, where you never have to go to the bank for anything other than, here, hold my money, so if I need to write a check, I can write a check and there can be an exchange there. And that's really all I need you for. Maybe a safe deposit box. And that's all you're going to want to use them for. So, get out of debt and divorce yourself from the traditional monetary system, the central banks, which are criminal, and all that mess out there. And how do you do that? Well, I want you to revisit the concept of the infinite banking concept, becoming your own bank. That's what my website is about. That's what a lot of my videos on my YouTube channel are about. I want you to get this book right here, Becoming Your Own Banker. Nelson Nash. It's almost 100 pages. It's not going to take you long to read it. And it will change your whole outlook on how you manage your money, becoming your own banker. The next book you want to get is How Privatized Banking Really Works. Now I've recommended both these books many times on videos. How Privatized Banking Really Works, and it's integrating Austrian economics with the infinite banking concept. This is going to explain to you fractional reserve banking, and central banks and all that stuff, and it'll scare you, but you get educated. You see, folks, in 1971 or 72, we came off the gold standard. In those days, when we were on the gold standard, if you wanted to print more dollars, you had to get more gold. Acquire it somewhere, mine it, or get it from someplace. If you didn't have the gold to back up the dollars, you didn't print the dollars. We came off the gold standard. Now money is no worth. There's no worth in it. It's a fiat currency. Its worth is whatever is declared to be its value. There's nothing backing it. So the governments and the central banks can go on their little quasi-criminal enterprises and print money and do everything they want to do with it. And we get more and more and more and more leveraged. You need to separate yourself from that. Now, the main principle, the main financial instrument we use is a whole life policy taken out with a mutual insurance company using a paid-up additions rider. Mutual companies are companies that are owned by the policyholders. They're not publicly traded companies. They don't have to worry about giving out their money to policyholders. You get the dividends and the interest. Now, everything I'm talking about is for people who want to save money and who want to put themselves in a good financial situation. Those of you who are just bound and determined to be addicted to debt and spend the rest of your lives leveraged up to here with debt, turn the video off. This is not for you. You'll never want to be a part of this. But for those of you who want to turn their lives around financially, get out of debt, establish a firm financial foundation, and retire with tax-free money in the future, you need to be listening to this. You need to be learning about how to become your own banker. You need to read these books. Even before you finish reading the books, you can be on the program. Okay? Because get this. Remember we told you about the banks are highly leveraged. Right? They got $1,000, they can lend $9,000. With an insurance company, if they've got $1 million in death claims outstanding, which means they've sold $1 million in life insurance, so if someone dies, people die, that $1 million gets paid out, they have to have $1 million in reserve. One-on-one. Insurance companies aren't leveraged like that. In other words, insurance companies, I'm talking about the big mutual companies, good, solid insurance, life insurance companies, not these property and casualty companies. They're leveraged out the wazoo as well. I'm talking about solid life insurance companies. They're highly regulated. Every dollar they have over here in death benefit, they got to have the dollars right here. They got to have the physical money to pay everything. That's what makes them so safe. The safest place, folks, that you can put your money, hear me now, the safest place you can warehouse your wealth is in a mutual life insurance company or a fixed annuity. Everything else is shaky ground. And I can argue that point with anybody. So what you want to do is you want to become savers. You don't want to have $100,000 sitting in the bank. Why? Because the bank is going to take that money and leverage it out. And if it fails, guess what? Oh yeah, we've got FDIC insurance. Well, good luck with that. Because if you have enough failures, how long is the government going to take to pay your money back when the government is $21 trillion in debt and they're highly leveraged? Our government is on super shaky ground, and it's better ground than any other country in the world. So what does that tell you? It's rough out there. So, you want to be a good saver. Save money. Every month, save money. And you can save it in a properly structured whole life policy with mutual company with a paid-up addition rider specifically designed to produce a bunch of cash. And that cash will grow every year, guaranteed. Mass Mutual is a company I use. Guardian is a company I use. Mass Mutual has paid a dividend every single year for 150 years. Guardian Life Insurance Company, another great mutual company, has paid a dividend every year without fault since 1868. It doesn't come any more reliable than that, folks. It doesn't. Banks, they get bailed out. Too big to fail. Baloney. They need to fail. And then they be restructured the right way. We don't even need a central bank. But anyway, I'm getting off the subject. So, you want to start saving as soon as possible, and saving it in one of these infinite banking policies is the best place to save that money. Why do you want to do that? Because there's going to come a time when there's $15,000, $20,000, $30,000, $40,000 because you're saving money, it's growing. And now at that point, whenever you need money, it's there. You borrow from the life insurance company. Don't borrow from a bank. You borrow from the life insurance. Now you could pay for it cash. The money is sitting in your cash value, but you don't want to do that. That would not be smart because then you lose the cash and now you got to start all over again and your cash isn't growing anymore because it's been spent. But if you need to borrow a car and you've got $40,000 in cash value and you need $25,000 for a new car, you go borrow the money, you go to the car dealership, you stroke a check, you pay for the car cash, you have the ownership papers in your pocket. They can't take the car from you. Now you're paying back the insurance company. Why? Number one, you can pay back any way you want. So if something happens, they're not going to come take the car. You own the car. You can pay back the insurance company as you see fit, even interest only if things get bad. But you always want to pay back because that's called being an honest banker. It's your bank. Pay back your bank. But insurance companies profit from lending money. The Bible says don't be a slave to the lender. That people who make the big bucks in this world are lenders. Insurance companies are big lenders. They lend to everybody else and they lend to you. And they lend to other policy owners. That's profit for the company, dividends that they pay out, dividends that go into your cash value and grow. So you are borrowing from your insurance company against your own funds. Your funds stay there untouched, growing like always. But the insurance company has profit from it. You're a owner, part owner of the insurance company because you have a policy. It's a mutual life insurance company owned by the policyholders. The profit from that lending activity comes back to you in form of dividends. It's all in-house. You're not lending, you're not borrowing from a bank or some other lending institution where they're getting money made out of thin air, leveraging the money system out there, and then profiting from that because they borrow it super cheap from the central bank and then they lend it out at higher interest rates and they're getting rich off of money that doesn't even exist. $5 trillion in all the world, physical money, and there's $25 trillion just in bank accounts. Get out of that system, folks. Divorce yourself from that mess. Start now creating your own bank with the safest place you can harbor your money, a mutual life insurance company, and get to the point where you never have to go to those guys again to borrow money. Pay for everything cash because you've got the money you're borrowing from. Pay for cash, pay it back, and at the end you've paid back that thing and you get even more money in your warehouse of wealth, which is your life insurance policy. And then when you get to your 60s and 70s and you want to retire and you've been borrowing for the last 20, 30 years or more from your own bank, and you've never been in debt, a slave to these other people, you're borrowing from yourself and making a profit. Now you get to retire debt-free with a load of money in there that you can now draw from on a tax-free basis. Or you can spend your life not saving very much money and spend your life borrowing, buying stuff that doesn't mean anything. You buy a car, it's great, it's transportation. 5 years later, it's not worth anything. So what has that money done for you? Borrow from your life insurance policy, buy the car that's going to depreciate, and let your cash value appreciate while you're paying it back. Right? Now your car is paid off, you've got a paid off car, and you've got a growing asset over here. Or you can borrow from the bank. You got no money now. You're in debt to the bank, and you buy the car, and it goes down in value. What do you got? At the end of 5 years, you paid off the car, you got no money in the bank. It's your choice. Become your own banker. Create wealth as you're borrowing for all your needs all through your life, even college for your children. And then get into retirement with 6 figures or 7 figures in cash value in your life insurance policy. Or policies that you can open separate. Highly leveraged central bank system, bunch of crooks getting fat while you hope it all holds together until the next recession when a bunch more banks go out of business. Or over here with mutual companies that have been around for over 100 years, always been profitable, always paying dividends, always have money because they do it the right way. Take your pick. Take your pick. Well, Victor, I don't have any money to put in there. Yes, you do. I don't care if it's $200 or $300 a month. You can save the money. Let's suppose you have an old 401k or an old IRA. You used to work over here. Now you went over here. You've got $30,000 sitting in there. And you go, okay, that's great. Well, you know what? That's going to grow over the next 20, 30 years, and then it's going to be 100% taxable in retirement. Meanwhile, you can't even touch the money till you're 59 and a half. What good is it doing you? And if you get an emergency and you don't have any savings, guess what you're going to do anyway? What the vast majority of the people, you're going to dip into that thing anyway. You're going to cash it out. You'll take the penalty and the hit, and you'll spend it on debt, and you'll never see that money again. Well, I'll tell you what, you got $30,000 in an old IRA, let's take $10,000 or $15,000 out. Is there going to be a penalty? Yeah. Will you be taxed on it? Yeah, depending on your tax bracket and your exemptions, it might not be that big of a hit. But guess what? You're going to put that money in your bank with the mutual life insurance company. You can start building your own bank. That's going to start growing money, tax deferred, no taxes on it. And when you get ready to retire someday, that's going to be a whole lot more money than you put in, and it's going to come to you tax free, and you'll end up way better off than had you left it in there. I can prove that to you all day long. You can leave the rest in there. Take some more out later on. Some people advocate taking the money out and put it into a Roth IRA. Same thing. You can't touch it till you're 59 and a half. So you can pull out principal. You're not going to be borrow against it. You can't build your own bank with it. It's not your rainy day fund. It's not your savings account. It's not your college fund. It's not your bank. The Roth IRA is not the answer in that case. Again, there's money. There's a bunch of you out there that have debt, and you're sitting on $30,000, $20,000, $50,000 in an old IRA, and you can use some of that money to fund a properly structured infinite banking policy, the way I've been explaining it. Start borrowing from it, get out of debt, grow those assets at the same time. You just need to divorce yourself as quickly as possible from the banking system and start getting your feet on firm financial footing, on a good foundation. And you can absolutely do that with the infinite banking concept. So after this video, just contact me. You can email me, call me, and just let me answer some questions for you and talk a little bit more about how it works, the infinite banking, becoming your own banker, and run some illustrations and show you how it could absolutely do great things for you in your future. It's not a short-term thing. It's a long-term play. We're talking the rest of your life. Getting yourself into a lifestyle of responsible financial living. And you can do that, and you can put yourself in a very safe spot over the next few years. A lot quicker than you think. All right, this is Victor Cuevas, Victor for Advice. God bless you all. Have a great Easter, and I'll hope to be talking to you soon.